Good afternoon, everybody. This is Jason Reynolds with the Real Estate Now podcast. And today I'm excited because I have Michelle Pepper with Dyer Max Insurance. How are you doing, Michelle?
I am good.
Good. Awesome. Well, Michelle has been working with a lot of my clients in the past that are specifically investors, and she's done a great job. And so I wanted to bring Michelle on. We'll get to know her a little bit, and we're also going to talk about specifically insurance for investors and some topics in that arena. But first, I did a little research, but there's not much about you online. So I guess it's a good thing. So there's only two things. You were with State Farm Insurance for a little over 29 years.
Yes,
And then you've been with Dyer Max for 10 years.
that's correct.
So can you tell us a little bit about yourself? Do you live in the area? How long have you been in the area? Are you married? Do you have kids?
I grew up here
Okay.
in Garland,
All right.
and I'm married. We just celebrated our 40th wedding
All right.
anniversary,
Awesome.
and we have
Congrats.
one daughter.
Okay. Awesome. So all the family lives in the area then?
We do.
Okay. So then when you were with State Farm, was it in the area as well? Was it in Garland?
Yes, it's that actually in this same bank building.
Okay. Okay.
We did not move far.
Okay. Okay. Awesome. And then you jumped over to Dyer Max.
Yes.
Okay. So what's the difference between State Farm and Dyer Max? What would you say is the difference between?
Well,
those two
State Farm is a direct writer,
companies?
and Dyer Max is an independent agent.
Okay,
So the
okay.
difference between them, State Farm, you write for State Farm.
Okay.
And Dyer Max, we have the opportunity to go out and shop the market.
Okay. So you're
Lots more
quoting multiple
opportunity.
types of
Yes.
companies. Okay.
Mhm.
Okay, that makes sense. So kind of jumping into the topic itself, you deal a lot with investment properties.
Yes.
Like, is that a majority of your portfolio?
It's a lot of it, yes it is.
Okay,
Mhm.
so what is the difference when you're looking at policies? What's the difference typically between a rental dwelling policy versus an owner-occupant type policy? What are some of the main things that are different?
Well, probably the largest is you don't typically have contents
Right. Okay.
on these investment type properties. I tell the clients that if that's what, it will help with the pricing, number one.
Right. Okay.
But, if they're just going to have a refrigerator in there,
Mm-hmm.
cost-wise, it's not, to me, cost-effective.
Okay.
So I just tell them, I would probably do it without it. You're going to have a deductible involved.
Right.
So that's probably your main, difference. You've, of course, got the structure coverage. You've got the liability. We write all replacement cost type policies.
Okay.
And you kind of pick and choose, deductibles and everything. But as far as the coverage, type, they're pretty similar.
Okay. Okay. So when you're looking at deductibles,
Mhm.
I know for personal home it can vary, but so I mean, what's the highest deductible somebody could have versus the lowest, and what you maybe see on a typical policy? I'm sure that can range, but
Right. Well, there's usually two deductibles,
Okay.
and the first one is for wind and hail, and it's usually in percentages, and it's 1 to 5%.
okay.
And that would be the percentage of what the dwelling structure limit is.
Mm-hmm.
And then you have the all other peril, which would be any other type of claim besides a wind and hail, which would be fire, lightning,
Tornado.
yes, tornado. Well, no, tornado would be under the wind and hail because that would be wind.
Okay.
Yeah.
Okay.
Water damage, things like that. And those deductibles start at $1,500, go up to $5,000.
Okay. So then, essentially, would you be looking at, say, somebody decided to get a 5% deductible? I'm assuming their premium's going to be pretty low because
Yes.
they would be taking a lot of risk
Certainly
if
would.
something happened.
Mm-hmm. Right.
Versus a 1% deductible, you're going to be paying a much higher
Right.
premium.
Right.
Okay. On average, what do you see a lot of your clients doing? Do they kind of pick the middle road, or does it always depend on what they're...
It's all about your comfort level.
Right. Okay.
And in this day and age, I see more of the investors going with the higher deductibles.
Okay.
But it's all about, if you're comfortable, and probably whether you have 5 properties or 10 properties, that may make a difference
Right.
also. But I have a lot of investors that are going with the higher deductibles to help save in the premium.
They're almost self-insuring in some ways. Yeah.
Well, you
To
want
cover that.
Yeah, you want to make sure that you got the coverage for the catastrophic.
Right, right.
You know, I tell people it's not always wise to turn in the smaller claims because those are strikes against you.
Yeah.
So I think it's better to save it for the larger loss.
Okay. Okay, that makes sense. So you had mentioned just a second ago about actual cash replacement or actual cash value versus replacement cost.
Right.
So I know when I've done research before, it's very important to figure out what your
Yes.
policy is on that because that
Yes.
can make a difference when you file a claim. So
Certainly can.
do different policies offer different options, or what type of policies do you?
I really stay away from the ones that are actual cash value.
Okay.
I want you, if there can be coverage, I want there to be coverage there.
Right.
When you do
Right.
have a claim. And replacement cost is much different than an actual cash value policy, especially, you know, if it's an older home.
Mm-hmm.
So very important to have the replacement cost coverage on there.
Okay. So if they were to call you to get, say, a quote on insurance,
Mm-hmm.
are you always going to be quoting them for policies that have
Replacement
the replacement cost?
Yes.
Okay.
Mm-hmm.
Gotcha. Okay.
Yes.
But even if they're contacting anybody else, it's important to ask that question.
Yes, it is, because there are a lot of policies. I deal with many investors, and there are a lot of different types of policies out there.
Okay. Gotcha. That makes sense. So then when we're talking about policies, this is a big area because you cover pretty much the whole Metroplex. I assume you go even outside of the Metroplex.
I do. I go all over the United States.
Okay, so what areas do you cover?
Oh, when I came here into the agency, they had never had so many licenses that they had to get for all these different states. So, I mean, I go,
Chances are
yeah,
you
from
cover it.
one coast to the other coast. And if we don't have our license and we can't get it, we'll get
Typically
license
get
for
it.
that state. Mm-hmm.
Okay. Well, awesome.
Right.
So then as you're looking, say, in this area,
Uh-huh.
when you're looking at premiums, do you see any difference in terms of older properties versus newer properties on
Oh,
premiums?
definitely.
Okay.
Yes. The
So
newer properties, you are going to receive a better rate on
Okay.
it. Same thing with the roofs.
Okay.
If you have an updated roof, you're going to see credit
Okay.
given to that quote.
Okay.
Even if we can issue the policy the next day, they even give credits for just one day out
Okay.
of when it needs to be effective.
Okay.
Lots of different types of, you know, credits that you can develop
Okay.
on these quotes.
Okay.
And we try to just, you know, ask all the questions to be able to get you the best
Okay.
pricing out there.
So when you're and now, you know, you mentioned it being newer, a roof can help.
Mm-hmm.
Is it more of a shot in the dark based on areas, like in the Metroplex, or does it change on a yearly basis?
It's changing all the time.
Okay. Okay.
I do so much of the quoting
Yeah.
that I can typically tell you.
You know.
And if an area changes, I can tell you that
Okay.
you know, within a month or two, we'll start seeing it change, and like, oh, now this is the really good rates for this carrier, you know,
Okay.
or with another carrier,
Okay.
they really have good rates. So
Okay.
it changes.
Does that change because of, say, a year ago a storm blew through a certain area and there were a lot of claims, so
Yes,
then
it
they're
does.
changing their rates based on a region?
Mhm,
Okay.
Yes.
Okay.
All based on, you know, the county, zip code,
Okay.
a lot of that.
Okay. So jumping into that, there's the question you and I have gotten a lot of time about from out-of-state investors of, well, are there certain areas to avoid for hailstorms or tornadoes? What's your thoughts on that?
Well, if you live in the
In the area.
North Texas area, it's not if, it's when.
Right.
You know, we just have hail and we just need to be prepared, you know, for it. The newer roofs that we are seeing put on the homes anymore seem to be holding up better. I
Okay.
don't know if you know, what they're made of now
Okay.
is just a better,
Type
you know,
of material.
quality. Mhm.
Okay.
You know, some of these people are putting the UL hail resistant
Mhm.
roofs on them. That's helping with it.
Okay.
You know, about the only time that if you have a newer roof and we have a huge hailstorm,
Mhm.
you know, if it's softball size hail, there's probably not anything
Right.
that's going
gonna hold
to,
up.
yeah, live through that.
Okay. So are there reductions in premiums if they are to get like a hail-resistant type of roof, if they're getting a replacement?
They have not done that on the rental side. They do that on the regular home
Okay.
policies.
Okay.
But they have not started that. I look to see them do that
At some point.
because a lot of the insurance companies on these landlord rental home policies are changing a lot of this, the hail resistant,
Okay.
the regular roofs. They're changing their stances on them
Okay.
and giving better rates for different things. So I see that in the future.
Okay. So then, if somebody were to call you today, an investor, and they're getting ready to buy a property and they need a quote for insurance. So you work different in State Farm in that you're shopping multiple policies, right?
Correct,
To kind of
yes.
advise your client on the
Yes.
best
Right.
fit for them.
Mm-hmm.
So how many carriers would you say that?
Oh, we
It
have
goes through.
multiple. There's 2 of them that we use a lot.
Okay.
But I have, 4 or 5
Okay.
that we can typically go to. And just from, seeing the address, that will guide me
Right.
and give me probably the top 2.
Okay, you'll know
that I-
kind of what is
Mhm.
going to be the best policy for that
Right.
area. Okay,
Mhm.
that makes
Yes.
sense. Okay, so a lot of investors, as they grow their portfolio, will own multiple properties.
Mhm.
So we were talking about the umbrella policies.
Yes.
What are the purposes of umbrella policies, and when do you typically see your clients, moving into that arena to getting an umbrella policy?
Okay, so let's say you start out with 2. We probably will put 500,000 liability on each
Policy
policy.
itself.
Mhm.
Okay.
And then when they're up to 4 or 5, that's when I really start encouraging them to go ahead and move into a general liability policy, which what you would end up doing would be to split off the liability charge that's
Okay.
on the dwelling policy itself, and then we would create a separate policy
Okay.
that would be a commercial general liability policy, which would give you an amount of 1 million over 2 million. And that would amount to, if they had 2 $1 million claims in an annual term, that's what the policy could pay.
Okay.
So instead of just having the 500,000, then you would have the option
Additional
of
coverage.
of $1 million.
Okay.
Right.
So it's offering them mainly more protection
Yes.
in that situation, and then you mentioned it might save them a little bit on their actual premiums for
That,
the
yes.
dwellings.
So if you had just the regular dwelling policy, you would be looking at anywhere from $50 to $100 by deleting the liability coverage
Off of that
of
policy.
that, and then
Okay.
putting it on to a regular commercial general liability policy for $1 million coverage. And that pricing starts, you usually can put 4 to 5
Okay.
properties on it, and it runs you $400 a year.
Okay.
And then, if they continue to build that portfolio, I really encourage them to look, for an umbrella also.
Okay.
The umbrellas typically run $400 per million.
Okay.
So just depending on what, amount you really feel that you need, I would really encourage that once you, get to the commercial general liability.
Okay. No, that makes sense. Perfect. So then, say Joe, is insured under you, and a hailstorm comes through, came through yesterday, and he knows he has to file a claim. So he calls you. What is the process like moving forward in terms of from the moment he calls you to getting a roof? What's that process typically like, and how soon does it usually happen? Obviously, it depends on if it was a huge area and you got a lot of insureds in that area, but
Yes, if we have a huge hailstorm, I just tell everybody to be patient. They will,
Right.
get this taken care of as quickly as they can. We just need, depending if it's a huge storm, we'll know the date of loss. But, a lot of times the tenants don't call and tell us when there's been a hailstorm in a certain area,
Right.
and we might not find out about it for 6 months. The date of loss is critical.
Okay.
Usually your roofers that go out
We'll know.
will know.
Okay.
So we would need that, and then whoever's going to be the contact, whether it's going to be a property management
Okay.
or directly to the insured.
Okay.
then we get it turned in. And you'll usually hear from somebody within a day or so.
An adjuster?
Mhm.
Okay.
They'll set up a time to go out and meet whoever,
Okay.
and they'll go out, do the estimate. And, if it's, I tell people, if it's an area where there's been a good bit of hail,
Mm-hmm.
the chances are you probably have a totaled roof.
Okay. Okay.
So, and they usually, they'll go ahead and write the estimate. A lot of the adjusters email them to you now.
Okay.
And you can look it over, and then the next day they typically go ahead and send out the check, less the deductible. Sometimes there is depreciation on it, depending on how old the roof is.
Right. Okay.
And then once everything is repaired, then you can send the invoices in, and if there is extra due to you from that depreciation, they'll send you a second check.
Okay.
Pretty
so you'll need proof
seamless.
that the work was done, and then
Yes.
Okay.
Mm-hmm.
Okay. That
Yep.
makes sense. Okay. Well, that covers everything I had. So if somebody that's watching this has additional questions, or they maybe want to look at getting a policy with you, looking at getting quotes, how do they get in contact with you? What's the best method? Email, phone number?
Okay, my email is michelle.pepper.
2 L's, right?
2 L's and an E on the end,
Yep.
yes. At Davis, DAVIS,
Okay.
Dyer, DYER, Max, MAX.com.
Okay.
And if you want to call my cell number, 214-212-6423.
Okay. Perfect.
And I'll be happy to answer any questions I can.
Okay. Well, we'll link all that below. There'll be a transcript of this podcast as well. So again, if you guys have any more questions, reach out to us. Reach out to Michelle. She's done great with my clients in the past. So hope it creates some business for her as well. Thank you so much, Michelle.
Thank you.